This is Scott Whitwam with your morning real estate investor update. And today's top story, some expensive markets buck the trend. According to Yahoo Finances, cities like Seattle, Portland, San Jose, and LA are saying that the signs of improvement come off a very low base. As we look for signs of improvement in what has been a nationwide bottleneck of listings and sales, this is a glimmer of hope. Even though all the cities identified by Yahoo are on the West Coast, many of these markets had been in a near pause with the higher interest rates that the market has experienced in the last few years. In September, when rates took a temporary drop, which appeared to kickstart many of our markets, but for most, it was short-lived. Buyers have left the market as quickly as they came, and rates have given back most of their declines. As investors, right now, patience is golden. In today's mortgage rate update, proof again that experts don't have all the answers. For a full year, I've been hearing from experts about how interest rates are going to come down. They'll be back in the fours by the end of 2024, they'd say. I would have to say that those who make up this consensus, they are wrong again. Though I think the Fed has no choice but to cut rates this coming week, the mortgage-backed security market has steadily shown that the money believes that this will once again be the wrong move. Bankrate is reporting the national average for the 30-year fixed-rate mortgage was up from 6.54% last week to 6.71% this week, a 17 basis points increase. This 15-year rate broke higher, exceeding 6%, with the 15-year average rate ending at 6.02%, up 19 basis points. In today's wrap-up, lumber prices slip again. This is both good and bad news. For builders, renovators, the lower lumber prices will bring affordability to projects. However, some of the price drops is simply the effect of supply and demand. As new home sales have slowed, lower demand for lumber, along with normalization of supply, is driving the pricing. Softwood lumber has dropped 2.2%, and plywood is down 5%, according to the Producer Price Index. We still have a nationwide housing shortage. At a time when we should be seeing large increase in new home construction, we're seeing lingering high inflation, lower labor participation rates than we had 4 years ago, record consumer credit debt, and rising delinquencies on auto loans. These things are going to need to be corrected before we see interest rates drop and sales rise. Be sure to subscribe to the Morning Real Estate Investor Update and catch me on the weekly Whitwam Wealth Real Estate Podcast.